Business Growth Talks podcast is created and hosted by Mark Hayward. In this show, we talk about how to grow a business in the growth stage. The growth stage is often marked by rapid developments, increased revenue, and an escalating customer base. In each episode, we talk to entrepreneurs and business owners who have grown businesses, and we cover topics like scaling processes, market expansion, financial management, human resource and talent development, and customer retention. If you are looking for actionable advice, tips, and techniques on how to grow, run and build your business, this is the podcast for you.
Today we have Tim Calise, who is a versatile entrepreneur, financial expert, and a podcast host. He raised $325 million before the age of 25 at a hedge fund from retail and institutional investors in 3 years. Tim has founded and grew 6 companies to 7 or 8 figures, including the health and fitness arena. Tim helped build Alan, an AI-driven SaaS platform, which solves the number one pain point for business owners: working leads. Currently, he is a co-creator with multiple service businesses like Coco Fit Club and Accost Consulting. He specializes in aligning products, pricing, positioning, and how to build a profitable business. Tim lives in Boston in the USA. If you are enjoying this content, please do consider subscribing to the show and you won't miss an episode. Hello, Tim. How are you today?
I'm wonderful, Mark. How are you?
I'm really good. Thank you so much for joining me today. We're going to have a lot of fun delving into business and talking about how we grow businesses, so the entrepreneurs and business owners that are listening to the show or watching the show can really delve into those sort of hints, tips, strategies that you've been able to build multiple businesses. But the first question I'm going to ask is, what does a business mindset mean to you?
Oh, great question. So I think for me, a business mindset is almost like the preparation to go out into the world and deliver value to, in whatever way, shape, or form you feel it most appropriate. And as a business owner and entrepreneur of now a couple of decades, I see myself almost like an artist, because there is so much art and science that really does go into founding, growing, scaling, exiting a business, because there is that soft part of what we do. Yes, it's spreadsheets and models and things like that. We can reverse engineer the outcome that we're looking for. But ultimately, in just about every business I've been associated with, it's really a transformation process. It's taking someone from their present state and delivering them to the ideal state that they're looking for. And I think part of the reason I've been successful is because it is that kind of equal parts quantitative, but also emotional and qualitative component as well.
So it's interesting you say about the art and science, because I think you're absolutely right. There's an element of entrepreneurship, of creativity, creating a vision, look for, even from a forecasting model, where do you see the business going? But you do need to measure. And obviously, if you can't measure it, it's very difficult to be able to predict or forecast for a business. But 20 years in business, what from the landscape of when you started in finance up to where we are now, the landscape must have changed so much.
I think the outer landscape certainly has, as I proverbially look out over the horizon. But I think the fundamentals, I've been running a similar playbook, if you will, for the last 20 plus years. And I know I've had the great fortune of working with many successful CEOs and founders, and so many of them are call it the bull kind of leader, which is they'll run through walls to be successful. They're super motivated, almost unwilling or unfazed by anything around them. I think for me, I have taken a little bit of a different approach, which is I've always been in service businesses, which effectively is the people business. And so even from, you mentioned the hedge fund business that we grew to over $300 million in a short period of time. Although that is as true finance as you can get, ultimately it was high net worth individuals who were entrusting us with their hard-earned retirement savings that we were able to then continue to build on and build a movement around kind of the safety and security of what we were building and the return profile that we had promised and things like that. Even going through technology service businesses and things like that. Technology is just a way for us to do what we do in a little bit of a different way, but the core value proposition is still intact. Yes, lots of changes along the way, but at the heart, I think human psychology has been something that I've really focused on throughout the kind of different chapters of that career.
So what I loved about what you said was it's fundamentals. And I was on a webinar last week where he was talking about we can all have hints and tips and strategies, but actually fundamentals never change. And I find that really fascinating that you see, depending on what type of business you're in, there are core fundamentals to how to be able to grow it. Just expand on maybe a couple of those fundamentals.
Yeah, a great mentor of mine and a coach that I had a chance to work with, a gentleman named Alex Sharfin. He wrote something called the Billionaire Code, but he started this idea of there are five core functions of a business. There's lead generation, which is effectively how do we take someone who doesn't know us and start to bring them into our world. Then there's lead nurturing, because not everybody is ready, willing, and able to be a buyer at any one time. Then there's the sales process, the conversion process. Then there's product delivery, and then there's resale and ascension or retention on the back end. And so when you think about fundamentals, yes, the businesses can change and the outside dynamics can change, but fundamentally, we need to do all five of those stages. And I think it's really important because we can almost map the success of the business and identify the bottlenecks in the business on those five core functions. And then we identify what is the right next thing for us to focus on, which is the lever we need to pull to get the biggest bang for our buck in where we can invest time, capital, et cetera, et cetera. The fundamentals are we need to, have a brand. Now more than ever, I think brand matters.
Yeah.
And then we need to find a way to attract our core customer. We need to give them evidence of what it's like to work with us and be part of our being part of our community. But some of the fundamentals are basic things. What is knowing our customer acquisition cost? How quickly can we recoup that? What does it look like to be a client? What's our activation and onboarding efficiency look like? So are we delivering on the promise that we've made? How long does someone stay with us? Because people will vote with their wallets. And that is very much a reflection of their perception of our value proposition. So I look at all of these kind of key metrics. They say there's that kind of famous parable of if you were on an island, you only had an index card and it only has a couple of numbers on it to know whether the business is doing well. What are those numbers? Or what's the one number? And I really do try to boil it down to what are the one or two key performance indicators that we really do need to watch at any one time.
We can go in lots of different areas, but one of the other things you said about the first question was about reverse engineering when you go into businesses.
Yeah.
Just talk me through that process. So you're helping a company and they have ambitious growth targets. What's your sort of idea? What's your concept when you're going into that business? How to reverse engineer? Is it a number? Is it a profitability? Is it revenue? Is it number of employees? Is it like what? How do you go in and work with clients by thinking about how to reverse engineer?
Yeah, so my sweet spot is really companies in the kind of 500K to $3 million a year revenue range. So they're not startups, but they aren't the 50, $100 billion where it's people systems and things like that. They're a little bit of a different animal. So in that range, the things we're really looking for, and everyone that I've had a chance to work with is really looking to get, if they're at 500K to $1 million, they want to get to 3 to 5 million. If they're at 3, they want to get to 10. And every business that I have a chance to work with, we really reverse engineered from working at the next kind of break point in the business. We say businesses break on the ones and threes. So the 3 million number, the 10 million number, the 30 million number, that's our next bogey. And then we say, for us to do $10 million in top line, what do our gross margins need to be? Okay, now we have an idea of what the product kind of mix looks like. Okay, in order to do that, how many clients do we want to assume we're going to have? What's our average price point? What's our retention numbers? Things like that. So we kind of work backwards, typically from the break point backwards. But if I have to choose one thing I look at, it's really how are we acquiring customers and how quickly do we get our cash back? Because in the early parts of the business, capital efficiency is probably one of the most important things. Second to just the number of offers that we make, which is just informing how close to product market fit we are.
Fascinating. And we're going to come to a little bit more of this later in the conversation, but I want to go back to your upbringing. Tell me one thing about your upbringing which reflects on who you are today.
So my dad was in finance. He was in professional. He worked at a large institutional bank. And so I always knew that I liked numbers. I knew I wanted to go. I think every kind of young son in many cases, or probably emulates what he sees around him. But I think the critical difference for me was I always, and my parents will say this even today, if there was an easy route and a hard route, I took the hard route. I always like to tinker. I like to reimagine. I didn't really follow the worn path, if you will. And so I think my entrepreneurial tendencies showed up very early in my life. And it probably looked like I was stubborn or pigheaded or whatever it might be. But I was always fascinated with how many different ways we could solve the problems around me. And an example of that is in my middle school time, my school didn't have the sport that I wanted, that I was playing, that I enjoyed playing. And so on a spring vacation, I took the catalog of equipment and I spec'd out all the equipment we needed. I put estimates for how much coaches would cost, buses and things like that. And I presented it to the head of my school saying, we need to have this team and here's the cost. I've already done the work. And I think I was maybe 11 or 12 at the time, something like that. And so I just use that as an example of, I was always fascinated by the idea of solving problems. And my parents, to their great credit, cultivated this idea of they encouraged me to do just about anything I could do that I wanted to do. And it's that old adage, you can do anything you want to do, just not everything. I was very much driven, and I think my hedge fund experience would be a great example of that. A 22-year-old kid should not be able to raise hundreds of millions of dollars from institutional investors. It would look like, didn't you know what you were doing? I think I was either naive or whatever enough to just say, nobody told me it couldn't be done. So I went ahead and did what I thought was the right thing to do.
So we'll come on to your experience as a hedge funder. So I'm fascinated. Like me at 22 years old, I just come out of university. I actually worked for a year and then went traveling for 8 months, 9 months, whatever. And my ambition was different to you. I had wanted to have more experiences, let's say, before I got into a career, into a business. At 22 years old, what gave you the confidence to think I'm going to raise $300+ million?
I knew that I wanted it. I just between the end of my kind of college university time and that hedge fund experience, there was a period where I worked at a division of Citigroup, Citibank, and I was basically in the retail brokerage area. And I knew very quickly that world was not for me. And for anybody who's not familiar with that, stockbrokers, you do a little bit of a training period, and then you have to make a decision to invest in training and setting up your own book of business and things like that. And I got to that point and said, I don't see myself doing this for 5, 10, 20 years into the future.
Okay.
And that's when I transitioned into kind of the more entrepreneurial wild west of alternative investments and hedge funds and things like that. This is in the 2003, 2004 timeframe. And I think at that time, all I knew was that I cared deeply about what I was doing. And I probably from an ego perspective, I was in the hottest sector doing something that sounded really fun. And I was able to figure out a unique selling proposition fairly early on. And we benefited greatly from having a great track record and my partner who was the portfolio manager. But I just put one foot in front of the other. And I never really thought it's like the journey of 1,000 miles starts with a single step. I never started thinking we're going to go raise hundreds of millions of dollars. We raised $100,000 at a time, $250,000 at a time, until we got to a certain level where we could take on more capital. But
were you encouraged? I know in banks you're encouraged to make money.
Yeah.
That's what the essence of what a bank is. But I've worked in corporate and I was in consulting. So it is a different mentality to banking. And in consulting, when I worked there, it was very much you learn over a period of time how to do some of the soft skills, some of the technical skills, but it was very much staggered that you had a career path set out in front of you and you got promoted. If you were good, you got promoted every 2 years or 2 or 3 years, whatever. But there was definitely steps that you needed to do. And sometimes you had to wait in line with other people and things like that. But it sounds like in your first experience in the hedge fund was that you were given a license to to go and raise that money, go and get that money? What was your experience in that way?
Yeah, and I think you're spot on. And it has been both a blessing and a curse to be given the flexibility and autonomy to plot my own course, because I didn't have 10, 20 years of experience to fall back on. I just chose a course that I thought would take us where we needed to go, partially probably from, like I said, a naive perspective, but it I've never been afraid of failure in that respect. It was take a step, see if it worked. And I was able to compound these kind of small decisions. And you asked a minute ago, what in my childhood could I kind of refer back to? Where are the seeds of this?
Mm.
And one thing that just struck me when you were talking was I was the kid who always wanted to be on the phone. This is back in the days of house phones. I would run across the room when the phone rang. I felt more comfortable talking to adults than I did my peers, even from an early age. And I think if you take that thread and then go into me in my early 20s, calling on people that were probably 20, 30, 40, 50 years older than I was, I think that that level of comfort that I had from an early age, I didn't have any of the stigma of, are they going to know how young I am? Do they know that I don't know what I'm talking about? I never had any of that. And and again, maybe it was just, I knew what I wanted to do. And so I just started where the natural course was, which was effectively cold calling and saying, here's what we do. Here's how we look at the world. If that's for you, I'd love to have a conversation about it. But we ran a $300+ million hedge fund with only a few people. And I was in Birmingham, Alabama, here in the US, which is it's not New York or Chicago or San Francisco. And so I think that even further reflects just how kind of outsider we were to the industry.
Why do you think you became entrepreneurial? Why was that transition from banking into entrepreneurship that you thought that was the right step for you? Because you'd been successful in the banking world, you'd probably got a nice bonus, and you probably were doing quite well. What was that yearning? What was that feeling that you wanted to do it yourself?
I think from the earliest time I can remember, I have been the type of person who jumps off the ledge and builds his wings on the way down. And I know that probably sounds incredibly risky, and risk is something that is an interesting topic in and of itself.
Yeah.
But I've always bet on myself. And I think the freedom is both exciting and liberating and probably petrifying all at the same time. But there have been a number of chapters in my life where I've effectively closed one chapter and started over again. And that is probably not the right way to do it, because experience and time compounds on itself. But I certainly have never been afraid of kind of shedding a skin that I wore and moving into a new version of myself.
Have you ever lost everything and had to start again?
Yes.
How many times?
I have just about lost everything and I was married with kids at the time. We got into a technology-driven fitness concept that, because of my ego, we grew very quickly, and personally guaranteed notes and things like that. And it was pretty much on if this fails, we're done. And yes, I have had my back against the wall at least once before. And yes, I know what that feels like. Even
When you were in that situation, because this is actually a really fascinating, and this is something that the early entrepreneurs in their 20s, like maybe early 30s, they worry about that because they've heard stories. And my business partner in my booking agency says that at one point he lost absolutely everything and had to start from zero. I think he had 30 or 40 employees. He was back down to one himself and had to do it again. What's the mentality when you have lost it all? What gives you the confidence or the certainty that you have to pick up the phone again, where you probably had other people doing the phone calls? You have to pick up the phone again and start calling people. How long was the downtime? And then what gave you the drive to go back and start it all over again?
So in that case, we had expanded too quickly. We very quickly started to retreat to a position of strength, which was, let's cut the underperforming stores, let's consolidate. We just had too big of a footprint. And I think being completely honest at the time, I was not the leader to lead that size of an organization. I
Okay.
think the company grew bigger than I could effectively lead it. And I'll leave, that's probably even too much poetic license. I'll say manage it, because leadership is a totally different animal. I think it got bigger than I could wrangle at that time. So life served me the lesson of, you don't have the beliefs or tactics or capabilities at that time to be that person. And unfortunately, it was probably the right thing to do. At that time, my ego was the biggest reset. And then from there, it was, well, am I even in the right opportunity vehicle for what I am actually good at? And I'm not sure about how you would feel about this, Mark, but I grew up feeling in school, it's like the smartest kids get the accolades.
Mm.
And I think I also was the type of person who was always working on his weaknesses. And I think after a period of time, and that was under the banner of, you have to know it all. The smartest person wins, the person who can withstand the most pressure wins. And I think in this chapter of my life now, I'm much more, as you mentioned in the intro, I run a co-collaborative, this kind of collaborative environment, which is, I know what I'm really good at. I'm going to go find other people who's have strengths in things where there might be blind spots for me. And the second that I doubled down and narrowed my focus and said, I don't need to be good at everything, I just need to find the opportunity vehicle where I can get the most leverage out of my strengths, everything changed.
So something you've mentioned twice now in different scenarios is your ego, that you're at a point. And one of the things like we often find with our businesses are, as a founder or co-founder, you often are the bottleneck because you think you know the business better than anyone else. You grew it, you started it. What's your thought on that idea of just, you have to drop your ego and you have to be able to do what's best for the business, not necessarily what's best for you, but to be able to grow the business, you have to drop that ego?
So I think the premise underneath the question is the real point. For so long, I was the business. I would introduce myself, and I was engaged from the outside world on the figurative success or failure of the business, because I was the owner, leader, founder, CEO, whatever it might be. When I switched my thinking from, I am not the business, then the business performance and my level of self-satisfaction were no longer interconnected. And yes, I've gone through these ebbs and flows of kind of personal development, but I am no longer tied to, if I make an offer and somebody says no, they aren't saying no to me, they're saying no to the offer. If the business fails or underperforms, it's not just me, it's the business. And that the compartmentalization of that was important for me, because I needed to be able to manage myself and the business separately rather than them being one and the same.
Yeah, I think that's something that we all struggle with, especially with early stage businesses, because before you start systemizing and growing a business, often you are a component or an important component of your business. And I think a lot of people who are listening to this might be thinking, I need to learn how to delegate better. I need to empower my employees to take on certain responsibilities. You need to get people, as you said earlier on, fit in roles that you either don't want to do or aren't very good at. And always rings true when people talk about delegation. Richard Branson, like, has run 50, whatever it is, 50 odd businesses, or runs 50 odd businesses. And he worked out very quickly that he needed to surround himself with people that were better at certain things. How does an established businessman that is still in the business, what's your tips on the role of delegating and how the best way for someone to delegate?
If that question resonated with you, you need to read the book Buy Back Your Time by Dan Martell. Dan is a serial entrepreneur. If you're not familiar with him, he's founded and exited multiple SaaS businesses, and he now runs the largest SaaS coaching company, especially in the North America. But he wrote this book, Buy Back Your Time. And the concept was it's actually less about delegation and you use the word empowerment. That's more the point. If I'm weak in an area and I delegate a task, then I still own the responsibility of the outcome.
Yeah.
Whereas finding other people that we can say, here's the outcome, it's more outcome driven than task driven, then they can use their imagination and their zone of genius to find the right path and have some ownership over that process. For established businesses, pay attention to the pit in your stomach when you are covering a topic that you feel like you're making it up or you're not 100% confident. Those are the markers of, and it's not go necessarily learn those things. It's you might need mentorship or support in that area. And it doesn't have to be a co-founder or something like that. There are lots of resources out there to be able to help you navigate those things. But as a founder, CEO, especially a leader, there are a few things you need to do very well. And I think we overestimate the number of areas we need to involve ourselves with. Be very clear on which levers matter, because it's like Pareto's law. Know the 20% that delivers the 80%.
Absolutely. I love that theory. So we've led on nicely to the next question, which is when you go into a company and you're saying you're in the collaboration and working with companies, what's the key information that you ask when you're going into a company to work out that strategy for the next, you said you do it in 3. So the next, well, it could be the next year, it might be the next 5 years. What's the key information you're looking for?
Yeah, so when I'm coming in, I want to understand where the business is today. So I work primarily in businesses that have recurring revenue, some kind of membership or subscription, because I believe in we make a sale to get a customer, not a customer to make a sale. So the longevity of relationship, I think, is really important, and it fits my kind of view of the world. So I want to know things like, churn rate is one of the most important because it's an external indicator of people's voting on the quality of the product. So if churn is high, it's both an opportunity, but it's also can be a red flag for something that's gone wrong inside of the product delivery. I also, as I mentioned earlier, I look at what's the acquisition process look like, because one of the things we do implement is a profitable acquisition system, where most people look at marketing and advertising as a variable expense. We turn that into a consistent profit center through some reverse engineering and product. We use product to attract new customers, things along those lines. And then as far as headcount is concerned, revenue per head count is something that we do monitor, simply because it's very easy to overhire, especially earlier in the game. And I want to understand general operational efficiency inside of the business.
What's your view on, you've worked in SaaS, you've worked in franchise, we'll come into franchise in a minute. What's your view on, because one of my biggest bugbears is that when people get investment and they're in tech or SaaS or something like that, they high five each other, they celebrate that they've got this investment, right?
Yeah.
And that's
the
okay,
beginning, not the
but
end.
that's the start. Exactly. Now you've got to deliver with this growth, with the investment.
Yeah.
But what's your view on investment versus bootstrapping? Do you prefer to get that security, you get that investment to grow the business, or do certain businesses not work very well with that and are better at bootstrapping?
I think for the large majority of businesses under $5 million in revenue, raising capital clouds or hides structural inefficiencies inside of the business. It's also the number one reason why people use the excuse, I will use that word, that people say why they can't grow faster is because they need more money. I 100% believe that just about every business should sell before they build. And this is, if somebody asks me, a newer entrepreneur or even someone who's just started, what is the best advice I could give you, is sell every product, sell every offer, collect the money before you build it. Yeah. Even if it is a smaller version of your larger vision, the number one thing you need to understand is, what does product market fit look like? And that is simply building the bridge between where you are and where your ideal client is. If you can understand that with active feedback, and the number one way to do that is just make offers. Hey, Mark, I'm in the consulting business. I'm thinking about running a course that teaches podcast hosts how to improve their distribution. I haven't built it yet. I think I'll launch it probably in 2 to 4 weeks. It's going to be $49 a month. It's going to look like this scale. If I build something like that, how does that sound to you? Oh, that's really interesting, but you missed this thing. Oh, interesting. Tell me about that. So what are the tools that we're going to use? Oh, I didn't think of that. Okay, so now I have a course with some tools. Does that sound good to you? Yes.
Yeah.
Okay. I'll have it built in 4 weeks. Can you put your deposit down to save your spot?
And
In software,
the key component you've done there, Tim, which is what really is a bugbear of mine, is that you don't have a business unless you get sales. Like, you could get investment and you can build a great product, but somewhere along the lines, whether it's you or someone that you're employing, you need to have sales to have a business, or it's a hobby. It's a very simple, but often gets clouded when it comes, especially in tech arenas, where they're thinking that they need to grow this to get the success down the road. But actually, growing a sustainable business is by bringing sales in. And it sounds so simple. Why do people not think of this, Tim? It really frustrates me, but why don't people think of it?
because when you are standing at the starting line and you step onto if you want to use the man in the arena analogy, when you step onto the field of play, we'll use that analogy.
Yeah.
You are now exposed. And it is easier to say, oh, if I just had more money, I would have been successful. Or if I had more money, I could market. Well, what is marketing going to do for you if you don't know who you are and what you mean to the world and what the product that you're going to bring forward? That is why so many people burn through capital, because what they're doing is they're using that capital to do something very simple as a substitute for legitimately picking up the phone and being open to the idea that someone's going to say no. I'm going to run Facebook ads. I'm going to tell you your Facebook ads are going to underperform because you don't know what language to use. But it's easier to say my ads are underperforming than I don't know what I'm talking about, or there isn't a market for my product. We have to get over this idea collectively as a community, that if we just adopt this idea of its speed to clarity. I have an idea, I think it'll work. I could raise $5 million and then go to market and see if it'll work, or I can just pick up the phone and get 10,000 no's before I figure it out. Yeah. And I fundamentally believe that the only thing that differentiates those that have succeeded and those that haven't is the ones that succeeded went through the trial and error iterative process faster than those that failed. And in such a short period of time, they didn't run out of resources.
So what do you say to people that are saying that I'm an introvert, I don't like selling, I'm not very good at it, I feel uncomfortable, put me in a room and I'll code all day? Yep. What do you say to those people who maybe at that stage can't afford a big sales team? What do you say to them?
Then the business has needs, no matter who you are, what you care about, what your views on the world are, or whatever. In your case, you need, and most businesses, especially early ones, need a visionary, a salesperson. Somebody needs to be telling the story.
Yeah.
So your zone of genius might be coding and product. That's great. You need to find someone who can be out being the evangelist.
Right.
Because there are so many great products that have died in silence. And conversely, there are many probably halfway decent products that have been wildly successful simply on the idea that they have somebody who is a great person with a megaphone.
Yeah.
We live in a world where you have to be out in the marketplace. They're not going to come find you anymore. There's too many competitors and too much noise out there.
Yeah, 100%. So why in 2010, after your hedge fund experience and you worked at Gym Launch and various other places, why in 2010 did you think that franchising Coco Fit Club was the right next move for you?
Yeah, so after my hedge fund experience, we were in Birmingham, Alabama, which my wife and I knew no one. We were there for the company. So when we shut the company down, we moved back to the Northeast in the US here, where we had family. And I didn't want to be in the hedge fund business anymore. And my wife and I were athletes in college when we met. And so we said, is there a way for us to participate in the health and wellness space in general? Right. And I didn't want to own a gym, but I was attracted to this company, Coco Fit Club, because they mixed or married technology and fitness together. And this is before Peloton, before Fitbit, Mirror, Tonal, all these kind of products that are out today. This is almost 15 plus years ago. And so I said, I like this idea of kind of prescriptive exercise. I think that's going to be a great macro trend. And the prior owners of the company actually had created this technology that they were then introducing into the franchise space here in the United States. And so my wife and I owned a number of these. We had 8 locations at one point, doing multiple 7 figures a year. And fast forward 6 years ago, I ended up buying out the franchise. And so it is actually in my portfolio today. So I own the technology and things like that. But yeah, it's been a great place to be. And I really do believe in marrying technology and fitness.
I 100% agree. And as you say, there are now so many different, there's almost, again, it's getting a little bit saturated because there's a lot of people out there doing that, but I'm sure you've got a good strategy. This isn't a question I often ask, but I'm just fascinated that you've grown businesses, you've done successful there. What does money, so is money a component of why you do what you do now? Obviously, when we don't have as much money is a driving force, you need to get to a point of financial freedom or whatever it is. But now, at this stage, 2023, how important is the role of money and growth in that side for all of your business opportunities that you've got now?
So for me personally, in my early years, it was I wanted to make money because of all the motivations of probably a male in his 20s. I wanted to buy all the things and have all the things. And a mentor of mine about 10 years ago introduced this concept of life, or the characteristics of each of us are like three sides of a triangle. There's wealth, there's happiness, and there's goodness.
Okay.
And I think in the beginning, there's so often it's like you want money, then that means that you're not happy or you're not a good person. And these things seem to be somewhat intimately tied together, but they are 3 independent sides of a triangle. And so once I said I can stake my personal brand on these 3 things independently, it unlocked a lot of things for me because I could be a good person. I'm a father of 3. I'm a husband. So I can be a good person. I can be happy, independent of what my financial objectives are for my life. But money really does, in my opinion, it is critically important it's like fuel. Yes, you can get above the level where it's a scarcity mindset and more of an abundant mindset. But money allows me to invest in new entrepreneurs. It allows me to invest in my family and do the things that I want to do to create the experiences in my life that I find valuable. If that's a kind of where the source of the question. But
No, it's choices, isn't it? It gives you choices, which is the point that a lot of people ignore or forget, or not forget. They don't think that's what it's there for. They think they need to show off with the new watch or the new car and stuff like that. And it's actually a personal, not personal struggle, but something I've been thinking about recently, which I've not shared on my show before, but and I'm doing a lot on personal wealth, personal finance, longevity, legacy at the moment. And something like my car, like I've had my car for what, 7 years, 8 years. It's a good car. It does fine, but I've got a little bit of FOMO about having a new car. And I see and I was listening to this book that was talking about like growth, like not just wealth growth, but like mental growth as well. That there are a large proportion of people that are in careers that have a car that is financed to the hill, a house that is financed to the hill. They are spending everything they earn, or if they are putting a little bit of money away in their pension, it's probably not the most efficient way, and you should be growing wealth in other ways. But it's a mindset that I think entrepreneurs have a different view that people that are in long careers of just they earn this much, they spend this much, and then it'll all be all right with a pension. What's your view on that, on like longevity? Because you've obviously been in business for 20 years. You've proved that in multiple disciplines, multiple areas of business. What's your view on that sort of idea about longevity growth for someone rather than that sort of expensing everything or financing everything to the hilt?
Yeah, so I'll answer it in two ways. So the first is on a personal basis. The track I would follow, and I would encourage anyone, is in the beginning, you need to acquire skills that allow you to generate income. And that is where most people stop. They stay on this consistent treadmill of I earn some, I spend it, I need to earn more to spend more, right?
Yeah.
The next, once you generate enough income, and typically that can be up to the equivalent of a few £100,000 a year or hundreds of thousands of dollars a year, you can get a great sales job and make $250,000 a year, as an example, with one skill. The point of it is you now have something that you can generate income. You live beneath your means until you can generate enough income that then starts to throw off its own revenue stream in and of itself, its own income stream. Where most people go wrong is they spend active income instead of investment income.
Yeah.
So imagine instead of leasing the car for $1,000 or £1,000 a month, which is very common here in the United States. Most recently, I saw the average car lease is $749 a month.
Wow.
Here in the US.
Yeah.
It's crazy.
Yeah.
If you took that, and let's go back 3 years when interest rates were low, for $749 a month, you could get a mortgage that would buy you a small single family house, which you could then rent out for more than $750 a month.
Yeah.
So step one is understanding the flow of getting out of spending active income and spending investment income.
Yeah.
And the goal would be to get your investment cash flow to be greater than hopefully 2 times your desired monthly nut. That is the goal. So that's one stream personally. From a business perspective, I think we can very often fall into the trap of being operators who quote unquote reinvest in the business, which is why I'm not taking any money out of the business. And so you're always cash poor, but opportunity heavy. I could sell the business. I could take more money out if I want to. Waiting to monetize your efforts at a sale is a road that is littered with bodies who have tried the same thing and failed. And the reason here, especially in the United States, 94% of companies sell basically at or below liquidation value. I encourage every business that I'm a part of is we build them for monthly cash flow. We do not build it for enterprise value.
Right.
If you have strong monthly cash flow, you'll have a great enterprise value on the back end. Jim launches a company that has been a great success story here in the US, especially. It went from 0 to $35 million a year in revenue. Alex and Layla Hermosi, who are the co-founders, who are now own a company called acquisition.com. He's publicly said he was making $2 million a month out of that business. He built it for cash flow. Now, he also sold it to a private equity firm 2 years ago. So I think the more we can think of capital efficiency, and this is where it intertwines between kind of your personal balance sheet and the business, you should build your personal balance sheet off of the distributions from a very well-run, capital efficient business.
And I agree. I think real estate property is a really solid way of being able. So I've invested in properties to bring cash flow in as well. And it's being able to do that as part of your business strategy is a really super important way of being able to get longevity. Like the whole Robert Kiyosaki, having assets, stocks and shares or properties, whatever your flavor is, or a mixture of both. That's how you get. So this is why I'm thinking a lot about longevity and about legacy and things like that from my own personal experiences, because I've got some of the components in place and it's now having that as a legacy for my kids and for when I'm older. Would I sell? Would I buy? From a business point of view, I think it's really important, and I've come back on this twice now, is having a really good company that is able to sell the product or service that you've got has to be the massive component of growing a business. If you're not the greatest salesperson, that's absolutely fine, but you do need to have the sales coming in or renewal of contracts. That's another really good way. Referrals is another amazing way that often retention and referrals are often ignored by business owners because they think they've got to get the next business in. But actually, you've got people that have experienced your product or service, which have enjoyed it. They might not be in the place to renew, but they know someone that could be interesting for them. It's a real another bugbear of mine is that just people forget that whole idea of renewal or referrals. What's your
Yeah.
views on things on those ideas?
Yeah, a great exercise to do, and it will expose some things for you. So just be prepared for that, which
Okay.
is if you could acquire one customer and you can never acquire another new customer again, what needs to be true about their experience that they can build your business for you?
Right.
What is the quality of the product? What is the quality of the service? What does that look like? And I think we so often get to, it's not scalable.
Mm.
That's like saying, I'm going to run $100 million company before I make $100,000. Like, you have to succeed in the short term to get to the long term.
Yeah.
Don't worry about the scalability factor. That's a problem to be solved in the future. Deliver a great experience in the short term.
And I love that
yes.
idea, Tim. I love that idea of going from 500,000 to 1 million to 3 million, 3 million to 10 million, that whole idea. And I had an interview with John Briggs a couple of weeks ago, and he said, which it really resonated, like this whole idea for entrepreneurs is, he didn't know what it was like running a business with 500,000 revenue until he was there. And then he didn't know what it was to run $1 million business and then a $3 million. So at each step, you're learning as you go along, but it is important to move from one section to the next section to the next section.
Absolutely. And you're building off of a base of what, and then you solve the next problem, right? So often we try to solve all these problems in a vacuum and in anticipation of what we think the problems will be. I can't offer that level of service because it doesn't scale. How am I going to do that? If I can do it for one, but I can't do it for 1,000. We'll do it for one, and maybe you'll figure out a way to get most of the way there, or introduce a different product mix, or what have you. But I just fundamentally believe in this idea of, I think affiliates are a great opportunity for anyone who, and I'm implementing this in just about every investment I have right now. I have a client of mine who wrote a book. Effectively, the idea was stop fishing with a fishing pole and fish with a net. And in concept, that sounds good. How do I do that? You find someone else who has your audience already, and you align your incentives with the owner of that organization, that community.
Okay.
To effectively inject yourself, allow them to edify you, and you can call it a referral, call it some kind of joint venture. You can compensate them for the risk of introducing you to their audience. It works really well. So if you are in the marketing space, you can go to an entrepreneurial group or something like that who have your type of client and say, can I do a webinar? Can I do a value add for your audience? I'll do 30 minutes or 45 minutes absolutely free. I just get to keep the opt-ins, the registration list. And then you can give them an offer on the back end or whatever. I just think we sometimes forget that somebody else already has our core client. Yeah. You have to figure out, there's an exercise called, it's like your top 100 or your power 100. Who are the 100 people you need to, if you could get introduced to, they will then introduce you to the next 10,000 clients that you can go talk to.
Amazing. What's your view on risk? We touched on it earlier. What's your view on it?
Yeah, macro, I look quarterly at, do I want to put risk on? Do I want to take risk off? Or do I want to stay where I am? And that's more of a macro feeling. So for example, a couple of years ago, I knew this was when here in the US, the government spending was off the charts. We're post-COVID, interest rates were low. Didn't take too much to figure out that inflation was going to become a problem at some point. And it was, let's strike while the iron's hot. Let's lock in what we call low and long on interest rates. And then we know that rates are going to come up. So do I want to be putting risk on? Right now, I'm about risk neutral. We started to take some risk off a couple of quarters ago because things look like it started to get a little unsettled. But from a business investment perspective, I try to find things that are fairly evergreen regardless of market climate. I don't chase any of the kind of hot markets. I'm not investing in AI tech right now. I just think that's a very difficult thing for me to do. I also don't look at Bitcoin and other cryptocurrencies. Those are trades or bets rather than a core investment for my
100%
perspective.
agree.
So I'm trying to buy cash flow effectively at this point. Underutilized or underappreciated cash flow right now in businesses that are more core regardless of economic climate.
Yeah. And I think from a macro level, you can't predict the next recession. Are we in a recession now? In the UK, we're like, we know we're in a recession, but the technical measures of a recession hasn't happened. There's
The
this
lagging
mixed,
indicators will hopefully catch up or probably catch
and
up.
it's a weird situation we're in. And so the reality is that a lot of people, cost of living we had out in the UK, something similar in the US, inflation's gone up and interest rates have gone up. And so it is a challenging market. And I think I agree that services that can be evergreen can happen in all cycles is a really interesting and what most people should be trying to work towards. And chasing trends is incredibly difficult to actually be successful long term. You might get a really big spike, but you're probably going to make a loss as well at some stage with those sorts of businesses. And I'm very careful in my analysis when I'm looking at businesses that, as you say, you want something that has sustained growth, whatever the cycle is in. How closely do you keep to macroeconomics within the US and the flows of inflation and recessions and things like that? How crucial is that for your outlook on life?
Yeah, I don't try to forecast. Interest rates are the most important thing because it affects my ability to use and raise capital, but it also affects enterprise values and things like that. And I think I want to add kind of two very specific things as it relates to risk. I think risk for me personally is anytime I go outside of my zone of genius, it doesn't matter what, it is riskier than otherwise. So I try to stick to what I know. Real estate, people say, are you investing in some esoteric thing? They might know a lot about it. So it's not restaurants, great example.
Yeah.
Maybe they're good, maybe they're not. I don't know the first thing about running a restaurant. So it might be good, it might be not. E-commerce is another area I don't spend a lot of time in. Probably lots of great investments there, but I just don't know it. So that would be risky for me, where it's very risk averse for somebody else. The second is timeframes. I think we misunderstand what it means to allow time to work in our favor. And equities are a great example of this. I put money in the market today and I want to see it go up every single day. I get the question quite often is, should I be investing today in the stock market? Well, it's not a yes or a no question. If you're not going to touch the money for 50 years, yes, you should.
Yeah.
If you want it 5 days from now, I have no idea. So I think timeframes are one of those things that I think we misconstrue how we should think about some of these things. And I think we are quite impatient and we put risk on when we don't have a high risk tolerance.
Right.
Would you put on a stock investment today and watch it go down 50% and not sell it? If you're not the person who can do that, you probably shouldn't buy today.
Yeah. Yeah.
So,
I think you're absolutely right. And it's actually something that a lot of people don't factor in. And the whole essence of compounding it's been proved a million times before, and a lot more smarter people than me bang on about it. But people are, and this is why trends and bubbles happen, is because people see a shortcut, a quick fix that they probably don't have the expertise. Like I spent about 2 or 3 years learning about property, about real estate, just so I could make my investments and understand it and think about other strategies that I wanted to do and am doing. And therefore I've de-risked that investment because I've gone into areas that I know, I've gone into markets that I know, and that's been successful for me. But yeah, if someone said to me who'd never looked, the only property they've ever looked at is their house that they live in, should I invest in property? It'd be like, well, you might want to get educated And then it might be a viable option because everyone's looking at some people, not all the people. Some people are looking at me going, should I invest in this area? If I've never been to that area ever before in my life, it's pretty difficult of me being able to say whether it's a good investment or not.
And people hear real estate, right? And then they think, I can go help flip houses.
Yes.
Real estate's a great example. It's a great place to be, but it's the one property in the area that you don't know that's probably a very risky thing to do.
Do you know one of the interesting things that I got educated when I was talking about real estate, when I was talking about property, was you should look for the worst house in the best area that you can afford you can go into, and because you can then upscale that property up to the level of everyone else. And there's some really, you talk about fundamentals, that's a fundamental, whatever the area that you're looking to, whether it's in high-end London or in a quarter somewhere, that like those simple fundamentals are what really can give you that insight that you can invest in. And I think when people who are listening and watching, you should really think about those fundamentals of your business that you know about, that some people don't know about, and you can package that into a course or into helping people, mentoring people, coaching people. But there are things that I know about that you don't know about, Tim, and there's lots of things that you know about that I don't know about. So we all bring an element of expertise, specializations that you can either help people or you can market as a business as well.
Absolutely.
What's the plan for the next 2 to 5 years for Tim?
Yeah, so I've structured my life right now to be this collaborative partner, which tactically what that means is I want to have minority ownership in a portfolio of companies that I can use my expertise, my influence, my capital, my network to help asymmetrically grow. And so I'm building call it a family. I think it sounds like you're building a real estate portfolio. I am looking to build a portfolio of service-based businesses that I can have some kind of working relationship with in order to grow over time. So my 5-year plan is I want to get to be able to have at least $100 million worth of influence in that portfolio in the next 3 to 5 years.
And do you have exit plans for all of them?
Some we might hold, some we might sell. I've started businesses where my plan is build it and sell it. And in my experience, that's not the right headspace to go into a business for. I'd rather have the option to sell it, not that be my exit strategy. So I am building businesses that I'd be perfectly happy building a cash flow stream from if I hand it off. And I'm not the operator in these businesses day to day. I have 3 kids. Maybe that will be part of what I can leave to them. And as far as legacy, I want to take the last 20 years of my life, package it in frameworks and really constructed thinking that can help the entrepreneurs that I have a chance to partner with. And it's all on a performance basis. So it's all additive. I don't want to take a piece of a company when I can't add value.
Sounds like there's a book there somewhere.
And now at a point where I love my zone of genius, and part of Dan Martell's book that I mentioned earlier is not just about building your calendar tactically, like how much free space do you have and what's on there. It is managing your energy throughout the day and throughout the week. And I love conversations like this. I could do this for 18 hours a day and have more energy at the end than I did at the beginning, even though it looks like it's a packed calendar. So I'm trying to be more mindful of unpacking what some of these lessons and frameworks that I have built in my head now to help get out for the benefit of others.
Amazing. Look, we're coming to the end of the interview. I ask the same 6 questions to all my guests. They're quick fire answers. They don't need a quick fire answer. The first question is, what's the best decision that you made?
Hiring a mentor. I hired someone who could see things in me that I couldn't see in myself.
What's the best piece of advice you've been given?
There's always another deal.
Ah, interesting. There's always another deal. Interesting. Who gave you that advice?
My dad. It's a derivative of a hurried answer, or a bad decision loves a hurried answer, or something like that. Yeah. Very early on.
Who's helped you most in your career?
The most important introduction, which was completely selfless, was the gentleman I worked for at the bank that I mentioned earlier. He had an economic incentive to have me on his team, and he saw it, took it upon himself to make an introduction that caused me to leave that company, but it was the right decision. And it
Okay,
set off a course of dominoes, which has gotten me here.
amazing. Tell me about a regret that you have.
That I didn't hire a therapist sooner. That success is between the ears.
Absolutely, absolutely, 100% agree with that. And what are you most proud of?
My family. I have 3 kids that I eat dinner with every night. I coach their sports teams, and I think they have learned by association what it means to set a goal and achieve those goals on your own terms.
And what does legacy mean to you?
Legacy for me is that I can pass down the critical characteristics that I believe lead to a successful leveraged life, unlike doing things on your own terms.
Doing things on your own terms. I think that's an amazing place to finish. And lastly, where can people go if they want to find out more about you?
Yeah, so website is timcalise.com, TIMCALISE.com. Social channels, I'm on LinkedIn, Instagram, and Facebook.
Thank you so much, Tim. It's been an absolute pleasure. This has been such a joy, just tapping into your experience, your knowledge, the fundamentals. I think is something as I said, I heard recently and it really resonated with me. So I've had an absolute blast. Thank you so much for your time, and I'll speak again soon. So that was Tim, and I found that really thought-provoking. I really loved that idea of the fundamentals of business and his lane of genius that he's been able to create businesses and work with businesses and collaborate with businesses. And it was really resonating with me, not with me, but the whole idea of having to drop your ego, that you're fundamental to the business, which is never really the case. So understanding what he's good at, being able to delegate effectively and empower people as well. We touched on that as well. But the guy is an impressive person, and the sort of multiple um, roles that he's done is as a hedge funder, as a franchisor, and then buying the franchise, and then building these businesses with consulting and mentoring. I think he's a really impressive guy. I really enjoyed that. And if you're enjoying this content, just have a think about looking back at some of the other episodes, because I always have a mix of different people, but we're focusing in on business growth and how to grow businesses. And I think Tim was super knowledgeable and really gave great insight into that. But there are other people on the show that give a different view or given a different strategy on how to do that. But we've all had setbacks. It was really interesting how he came back from that setback, and it sounded like he rebounded quite quickly and realized what he needed to do differently this time around to not repeat those those same mistakes. And thinking about like the KPIs that you need in your business, what are the key performance indicators that are going to really represent your business? And we talked about it a couple of times. Sales is so important. You need to validate your product or service in the market and really understand what they need. And if it isn't working, maybe you need to tweak it, change it, pivot it to be able to get what the customer actually wants. And I think it's really important for you guys to think about that. But you do need, if you're not a salesman, if you're not a natural salesman, you need to find someone that's going to be able to do that, be that creative spark within the sales industry to really propel your business. And investment is good and it can be the right way for you, but that's not the end goal. The end goal is use the investment to be able to scale the business. So do think about that, and dropping your ego and working out ways of being able to be more efficient is super important. And I'm going to reflect on this conversation probably in the next couple of days as well. I might record another one. I'm not sure, but This guy has got a lot of knowledge and a lot of. So go to his website, tincalise.com, and really research him and understand what he can do. And maybe he can help you. Maybe he can help someone that can help you. I'm sure he would be happy if you did reach out to him. But really enjoyed that. Had a really great time with Tim, and looking forward to the next one. On to the next one.
Thank you for listening to Business Growth Talks. This podcast is released every Monday, so don't miss an episode by subscribing to all podcast platforms, including Apple and Spotify. Have a great day.